Back with markets at lunch right here on ETNOW, and NIIT numbers currently flashing for you on your screens. The PAT is actually half this quarter to 7.4 crore rupees versus the comparable of 15 odd crore rupees. Let's just wait by for more numbers as well and tell you whether or not there is a one-time hit, which is why the PAT performance has been so starkly lower or not. We will wait by for some more details before giving a verdict really on NIIT. Just optically looking at the PAT performance, this is not going to go down all that well. But quickly go across to our chartists and get in some more strategies. Kunal, what else is on your list?
Well, I think a couple of other stocks which are looking attractive. First one is Indiabulls Real Estate. The stock is looking probably giving a swing breakout on the hourly charts. I think it's just about broken that crucial resistance of 90. So that's one stock which I would look out for from a short-term trading. Probably have a target closer to 93.5 and a stop loss of 89. And the second stock which which is looking attractive, which was more or less sideways for last I think 2 or 3 weeks, is DCM Shriram. The stock is trading at 220 to 21. It's just about giving a swing breakout on the short-term time frame, so I would expect the momentum to continue on DCM Shriram. 230 is a target which I would look out for, and 215 is the stop loss.
Okay, that's a strategy coming in. On the technical side, what about you, Siddharth? Any stocks?
Well, TVS Motor we have been active in. That stock has given a good move today of around 3% or so, and volumes in cash market are very nice. So I would suggest even at current levels one can form long, and I'm anticipating prices to move towards 325, 330 odd levels. So that's one stock where one can trade with positive bias.
TVS Motor, was it?
Yes, TVS Motors.
Okay. That's the strategy coming in. Meantime, that's the management of NIIT as well, gearing up to address the media. And just walk you through some more nitty-gritties on their numbers. Operationally, pretty steady as the margins have come in at a healthy 9 versus 7%. You've got the EBITDA, which stands at about 22 crores, and the revenue growth has been steady at 260 crores. Operationally, pretty steady as the margins have come in at a healthy 9 versus 7%. You've got the EBITDA, which stands at about 22 crores, and the revenue growth has been steady at 260 crores. Yes, the only disappointment is in the profit figure, but watch out for any one-offs, etc. Halved to 7.5 crores, the stock's still in the green. In the meantime, let's bring on board a fundamental guest, and Ritu Arora, CIO Canara HSBC OBC Life Insurance, with us on the show. Ritu, hi, great to have you with us. Let's talk about what exactly your outlook is when it comes to the cement space. I ask this in light of the big results that we're expecting today, Ambuja as well as ACC, and the consensus is that the lower volume growth might just dampen Q2. What's your call?
Thanks for bringing me on the show. I'm personally bullish about cement from mid to long term. The stocks have performed already quite well, and the result may have a few disappointments here or there. But I believe that as a sector and the domestic investment story that I believe in, cement is a sector to be invested in with a couple of years of horizon in mind.
Right. In the meantime, just want to mark a... Yeah, we can cut across to NIIT in the meantime. Ritu, will come back to you.
Indran, Joint Managing Director, Rahul Patwardhan, Chief Executive Officer, and Rohit Gupta, Chief Financial Officer. So I will request Rahul or Pat to please talk about the results.
Thank you, Vijay. Headline is that the transformation program of NIIT continues to move ahead on plan. I'm very pleased with the results of the quarter. The team at NIIT has worked extremely hard on the plan that we laid out 18 months ago, and I'm happy to say that we have met all the numbers that we had planned to achieve on our operating performance for the quarter. If you look at NIIT overall, our revenue hit 2,604 million, up 12% year on year compared to the same quarter. What I want to highlight is the second double-digit growth rate that we've had in the last 16 quarters of NIIT's performance. What's more heartening is that if we exclude businesses that we have exited last year and do an apple-to-apple comparison, the growth rate actually has been 15% YOY. Which augurs well for the continued future growth rate of the company. Our EBITDA also has improved substantially in terms of operating performance. It's up now to 9% at 222 million. So that's 36% increase in the EBITDA over last year, same quarter. 151 basis points. All this has been achieved on the back of steady performance of the CLG or corporate learning business and the acceleration of the revenue and the growth rate of the skills and career business, which we had promised would start happening from this quarter onwards. Our PAT, however, has declined primarily on account of the fact that our associate profit got reduced due to one-time exceptional costs in the associate business, plus some foreign exchange losses that we incurred in this quarter. Okay. Our DSO days have improved, so all the operational parameters have seen substantial improvement in the quarter. So overall, the quarter has gone very much to plan. The SNC business has delivered on its transformation process, while the CLG has been rock steady in its performance. Corporate learning has grown 19% year on year, a 13% constant currency improvement. EBITDA has delivered 12% as on plan. Our MTS revenue has increased to 91% of the revenue share. Our visibility has increased to $208 million. We won 2 new contracts as well as 1 large contract extension from 3 of our MTS existing customers. Overall, CLG has moved exactly on plan as promised at the beginning of the year. The SNC business up on revenue by 7% year on year. Last year, same quarter, we had a -3% growth, so there's a swing of 10% for the quarter one. The EBITDA is up to 4%. Last year, same quarter was 0%. So again, we're seeing traction and acceleration both on revenue and on EBITDA for this business. If you recall, last year we said that this business will come back to growth and back to profit. So it was just about positive growth and a little bit of positive EBITDA. This year we are starting to accelerate this business, and that is having an impact on the overall EBITDA improvement of NIIT substantially. What's more important is that the go-forward business of skills and careers, if you exclude some of the businesses that we exited last year, is not 7% growth, it's actually 11% growth, which again tells us that this is the kind of run rate that possibly could be the new normal for this business going forward. Our Beyond IT business grew to 45% of our total revenue share. But what was most exciting in this quarter was our DigiNext series, a series of programs targeting the new digital transformation skill set. We've had extremely good feedback and response to the programs that we launched in May. Oversubscribed courses, a lot of interest amongst the very bright student community in engineering colleges, and also a lot of interest from the recruitment companies who are actually starting to want to book students before they pass out from these programs. Our schools business, there was a reduction in the revenue of this business as planned because, as you know, our government business was coming to an end, or one part of our government business. However, our EBITDA has improved from 6% last year in this quarter to 7% in this quarter, which reflects that share of our more profitable business, which is the private IP-led business, has increased, and therefore the profits improved. We added 139 schools in this quarter as new customers. Overall, therefore, looking back at the performance of the quarter, it's again a clear evidence of when you have a clear plan, when you execute to that plan, when the entire organization is aligned to the execution to a common vision of where we want to go, the outcome will happen and you will deliver the results that you wanted to do. Going forward, we continue to hold to what we said at the beginning of the year. The CLG business will continue to track at 15 plus on top line and 12% on EBITDA. The skills and career business should have, for the full year, a high single-digit growth rate on revenue and improved margins, low single-digit margins. And the schools business, the IP-led part of the business, should deliver mid-range.
These are the highlights coming in from the NIIT management. The stock currently lower by about 0.5%. I think the bigger disappointment has been that the PAT has halved this particular quarter as compared to the same quarter last year on a year-on-year basis. Simply numbers out, and they look like a decent set right now. Just take a look at the PAT performance.